Welcome back, everyone. You know, tax season is here. The IRS will begin accepting electronic and paper returns on Monday, and this can be a stressful time for some folks. So joining us this morning to give us a few tips is Julia Clark with Julia Clark and Associates. Good morning, Julia.
Good morning.
First and foremost, tell us what it is you do and about those fancy letters that come behind your name.
I'm a certified public accountant, and I help people at filing their tax returns.
You know, I think this year one of the big questions is how does this new act that was put into place by Congress impact tax season?
Well, most of the provisions in the new bill will affect us in next year's filing season. There are a few changes for this tax season that will be beneficial to taxpayers.
And what are some of those changes?
So medical expenses will drop down to, they have to exceed 7.5% of your adjusted gross income. That is down from 10% last year. We still get the property tax deductions. In 2018, we'll see that trimmed down to about $10,000. We still have sales tax deductions this year. So you'll want to look at, you can take a tabled amount based on your income and number of members in your household, and then you can add major purchases, sales tax that you paid on those.
Talk to us a little bit about itemized deductions. This is where a lot of people find it tricky, right?
Well, you can either take a standard deduction or your itemized deductions. And itemized deductions can include things such as your medical expenses, property taxes, sales tax, mortgage interest that you paid on your house, and then miscellaneous itemized deductions. And this will be the last year that we see those deductions. And those can include anything from unreimbursed employee business expenses, job hunting costs, investment advisory fees, and tax prep fees.
And so in your opinion, how can people decide on what's best for them, whether they should go with the standard deduction or try to itemize things?
They'll want to look at how much, if they come over the threshold. For a joint married couple, the standard deduction will be $12,700. So if their itemized deductions exceed that, they'll want to go that route.
Okay, and you know, a lot of people in our area were impacted by Hurricane Harvey, particularly those of our viewers in the LaGrange area. Talk to us about what they can do this.
Yes, the Tax Cuts and Jobs Act made significant changes that will be very beneficial to taxpayers. So if you were in a presidentially declared disaster area, that did include people in Travis County, and you had a significant economic loss, there are some provisions there. There's an increased standard deduction that you can take. There are easing penalties on taking out money from your retirement accounts. The 10% premature distribution penalty will not apply. You can also take out up to $100,000 out of your retirement accounts. You have a 3-year period to recontribute those funds back, or you can take that income into account over a 3-year period. So those are very significant changes that can affect taxpayers.
And would you recommend that someone who was impacted get a little help this year trying to figure all this out?
I definitely would. It can be very difficult to determine how to make those calculations, and they should probably seek the help of a tax advisor.
Okay, fantastic. Well, we thank you so very much for joining us this morning. And if you want to find more information about tax preparation in our area, you can head to the news link section of kview.com. We have some information for you there. Jenny?
Okay. Thank you so much, Ashley.